Hi there, Shingirai here again with another update on portfolio performance over the past week. On a one-week basis, 8 out of 10 of the CBAM portfolios outperformed their respective benchmarks, with returns ranging from CBAM 5 V2 returning minus 1.97% to CBAM portfolio number 1 returning minus 1.41%. In terms of main contributors to performance, we did see a strong rebound there from our equity Indian subcontinent position, up 0.86% on the back of the government of India announcing that they predict the economy to grow by 7% based on GDP, after seeing some strong domestic demand and some an increase in domestic investment. We also saw some strength there for M&G emerging market bonds, up 0.11%, and then that's on the back of most Asia-Pacific countries that are emerging countries seeing less inflationary pressures than their developed market counterparts. In terms of detractors from performance, we did see some turnaround there from our Japanese equity positions, both through JP Morgan and Fidelity, down more than 3.4% on the one-week basis, on the back of news breaking about some more COVID-related curbs affecting certain areas of Japan. Europe continues to see detracting in performance, down 3.49%. And then again on Thursday today, we were seeing just that 75% jumbo rate hike coming from the European Central Bank, also serving as a headwind for European equities. Moving over to a quarter-to-date basis, 1 out of 10 of the CBAM portfolios outperformed their respective benchmarks, with returns ranging from CBAM 5 returning 2.66% to CBAM 1 V2 returning minus 1.11% in a relatively risk-on quarter. We did see some outperformance there from iShares Global Clean Energy, up 20.39%, and Pictet Clean Energy also up 16.45%, really reflecting there that European energy crisis, rather global energy crisis, and investors and governments all beginning to look towards alternative energy solutions, and that would be a strong tailwind for iShares Global Clean Energy and Pictet Clean Energy on the quarter. As I alluded to earlier, that strong GDP expectation and domestic demand and investment in India really being a driver, and you would see equity Indian subcontinent up 17.39% on the quarter-to-date basis. Property market woes, and again rolling lockdowns under the zero tolerance COVID policy, would see our 3 Chinese positions, equity positions, down on the quarter-to-date basis, and most notably Columbia Threadneedle down 10.48%, and Bailey Gifford China down 10.24%, largely based on those 2 major concerns. But we are looking forward to the Chinese Communist Party Congress coming up on the 16th of October, where we'll be getting some clarity, hopefully, on how China intends to support GDP growth and also transition towards a more gradual sort of stance with regards to COVID-related lockdowns in provinces of China. In a rising interest rate environment, finally, we did see headwinds there for 921 Global Gold as investors mulled the non-interest returning asset in a rising interest rate environment. We did see also Japan recently headwinds after a relatively positive quarter, returning more than 4%, and also a rebound there for European equity on the quarter, returning more than 4% as well.